So before we jump in, I want to mention that I am currently exploring different lighting solutions for the show. I know that the lighting isn't always perfect, but luckily we're here to analyze the markets and not my face or this room. So if a few episodes look a little bit off, it's just part of the process as I experiment with new setups to find the best look for the show. Thanks for sticking with me through the adjustments, and I hope you enjoyed today's segments. Welcome back to Cry Finance. I'm your host, Cry. Today is October 14th, 2024. It is Columbus Day, or as some people call it, Indigenous Peoples Day. And if you don't like that, you can cry about it. But remember, emotions don't belong in these markets. So let's leave that noise behind and dive right in to today's key insights. Today brought a different setup to the markets that we haven't discussed yet, which is holiday trading. Now, the bond market and some banks were closed today. However, the stock market was in fact open. Now, this creates typically some low volume trading, which can cause some distortions, I would say, in how trading occurs. So, as I'll discuss later, I'm not going to do charts of the day just because those distortions are going to muddy the broader outlook. And I don't want to do that. I don't want to have everyone looking at these charts. I don't want to be making stuff up. That's not correct. So we're just going to pass over the charts of the day for today, and we'll resume that tomorrow. Now, let's talk about the S&P. So the S&P, it closed up about 45 points on the day. It closed around 5860, just a hair below that. But it's interesting because it seems like now we have to keep emotions out of this market, but on the same token, we do need to analyze market psychology. Now, everyone is looking at this election that's coming up. That's the way this market is viewing things. It's viewing things in the lens of the election is a finish line, and that's where we're going. So, usually in the last leg of a race, you're going to see things accelerate. You're going to see the participants of that race accelerate. And I'm not talking about the candidates of the election, I'm talking about this stock market. So, that's what this buying, in my opinion, is. We've got an emotional investor or trader base that is getting very emotional and seeing that finish line and saying this is our last chance for big gains, because there could be some fiscal policy, some dramatic fiscal policy that's coming down the pipeline that we just don't know uh, what it's going to be. We don't know what it's going to even look like. There have been some talks here and there, some Twitter posts or whatever, but at the end of the day, we really just don't know. It reminds me a lot of when Trump was elected, and then we had the China trade war, and then there were trade deals, but then we didn't really get to see the contents of the trade deals. So, and we were trading based off of that, which was a wild time to be alive. But in any case, oh, and whatever happened, whatever happened to those trade deals, we just don't know. There was phase one. I think we ended up getting to phase two, and then COVID broke out, and the whole thing just we never talked about it again, which was interesting to me. But okay, we'll move forward. I could talk about that all night. Um, okay, so any dramatic fiscal reform has a high likelihood of further inflating the national debt, which has been expanding for really as long as I can remember. And it's getting even more visible as we approach this election. So, what's my expectation? It's going to be volatility. We're probably going to see some turbulence going into the end of quarter 4 here, but I would not be surprised if it takes as long as the beginning or the even the middle of quarter 1. But I really do believe that it's going to be sooner than the middle of quarter 1. It's probably going to be a late quarter 4, early quarter 1. Um, Probably some sort of a flash crash. Nothing too dramatic, nothing too crazy, but I could see that happening with the rate that gains are being put on in this market. So let's keep a sharp eye out. Let's stay focused. Let's not get too ahead of our skis here. It is an exciting time to see the S&P going up 0.75% here, 1% there. We've got unicorn tech stocks flying off the shelves, and it's like Christmas morning every single day in this market. But at some point, the music will stop, and it'll be time to sit down and find a chair, and you got to make sure that a chair is going to be there for you. So that's it for tonight's episode of Cry Finance. I know tonight's episode was a little bit different, but that's okay. It can be a little different sometimes. Um, I'm always here to provide information, insights, just helping you stay focused. Just want to be a resource for you in these markets to just make sure you keep your emotions out of things. Uh, Whether it's your trading or investing or just general market approach, I'm really happy to be a part of just that whole process for you. And I look forward to continuing to be part of that process for you. So thank you guys for all your support. Again, I'm looking forward to an announcement either this week or next week about the show and about I don't want to reel too much, but a nice addition to the show, which I think is going to complement the show in many ways. So without me saying the show one more time, I will end it here. So that's it for tonight's episode. Stay focused, stay sharp. I'm Cry. Have a good night, and I'll see you tomorrow.